Now, the theme is challenges for monetary policy. We don't have an agenda yet, but how much will China be spoken about, Michael?
Well, certainly on the sidelines, people will be talking about trade wars, because that's what's affecting the global economy. We don't know yet what Jay Powell is going to say in his keynote address, but Wall Street is pricing in the idea that he is going to talk about what the Fed does next to help counteract the impact of the tariffs and trade wars. The question seems to be, how far will he go in making any kind of promise in terms of rate cuts?
If he doesn't, what happens? Communication is really something that he hasn't particularly cracked yet. Getting the nuances right now feels like a really important job for Jay Powell. How would you rate the chances of kind of him being able to get through this, Mike, without tripping over?
I don't think I even want to take a position on that guy, because it's going to be very difficult for him. They're in a no-win situation. I mean, if they cut rates and the economy is growing as the Atlanta Fed has it right now at a more than 2% pace, that's kind of hard to justify. But if they don't cut rates and the markets tank, that's also kind of hard to justify. They've been backed into a corner. So Powell has to say something that will appease the market, it appears. But how far does he really want to go? Doesn't he want to keep his options open? Because we're only at 2% right now. There isn't a lot of room to cut rates if we get into serious trouble. If we're not in trouble in cutting rates, that doesn't leave him a lot of room.
You know, the Fed is engaged in a whole year-long discussion about where monetary policy is, and now this theme, challenges for monetary policy. How much can members of the FOMC and the broad Federal Reserve discuss this when maybe it's not monetary policy that's the problem these days?
Well, part of the misconception about Jackson Hole is that it is some sort of conference where central bankers get together and make decisions about what they should do next. It's an academic conference where they present dense academic, math-filled, graph-filled papers and discuss those. A lot of it is theory rather than practice. And so they set a theme, challenges for monetary policy ahead, that sort of fits with this whole Fed review. But it doesn't mean they're going to make any decisions or that much is going to come out of it in terms of these papers. They'll discuss them. Maybe there's something in there they want to use. Maybe there isn't. But the conference itself isn't about what's going on in the larger world. We've just made it that way because all the reporters go, and we'll be talking about what Jay Powell has to say and interviewing Fed officials.
But I guess it is relevant. The real world is relevant right now. Europe looks like it's in a liquidity trap. The ECB looks like it's getting to the end of its ability to use monetary policy to stimulate the economy. Companies simply do not want to gear up with these lower rates. That is a real world situation that is going to affect the theory. We all remember reading theories about liquidity traps. We're there now. That must impose on the thinking at the Fed's meeting. Has monetary policy reached the end of the road?
Well, obviously, Guy, that is an important question. We'll see what the papers have to say and what gets discussed inside the session. But no doubt that's on Fed officials' minds. It's a question that's been asked of Jay Powell a number of times and other Fed officials over the past couple of weeks. Why do you think a rate cut is going to solve a problem like a trade war? There doesn't seem to be a demand problem, and there doesn't seem to be a cost of capital problem anywhere in the world. It's at this point that businesses don't want to invest, and exports are down, and that's hurting countries around the world, including the United States to a certain extent. So how do central banks deal with this? Probably the more important idea is if Germany actually were to go ahead with fiscal stimulus, that would do more than any kind of ECB rate cut probably.